Now, even though generally speaking, I'm sort of more or less against dividend paying ETFs that are going to be yielding north of 15%, and this is because a lot of times those sort of dividends are unsustainable, and or if they are sustainable, they come with a massive amount of NAV erosion. But over time, it seems like more and more newer ETFs are coming out with different strategies that might actually be able to sustain long-term dividend yields north of 15% without massive NAV erosion. And this is without massive share price decay. Now in this video specifically, we're going to go through and I'm going to share with you 5 different dividend paying ETFs that all yield north of 15% and even some much more than others. But what's best of all about this is that every single one of these ETFs all also offer a positive total return, which means long term, at least so far, every single one of these have been great investments. So if you want to see 5 of my favorite dividend paying ETFs that yield north of 15%, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first dividend paying ETF that yields north of 15% just slightly is one of my favorite holdings, and this is one that I've been buying throughout 2024 so far. I'm talking about SVOL or SVOL, the Simplified Volatility Premium ETF. Now this ETF basically shorts the VIX and offers a massive amount of premium for doing so, and since inception has been paying investors a massive amount of distribution to the tune of around 30 cents more or less every single month over the past several years. Now, what's also great about SVOL is that even though, of course, this ETF strategy is to short the volatility index, meaning that if there is high volatility, this ETF could be in some trouble. Just as of recently, when we did see the market go crazy and we saw volatility spike, SVOL held in there pretty good because, of course, it also purchases a modest option overlay, which, of course, is going to protect against adverse moves, which it says right here in the strategy. Now, as far as yield goes, SVOL's yielding around 16% as of right now. And like I said, for every single share of SVOL that you purchase for around $22 per share, you're more or less at least assuming to make around 30 cents per share per month. But also what's great is that SVOL, at least since inception, 3.32 years in, so we do have a decent amount of time for him to go off. SVOL has returned around 38% as far as total return goes, or around 10.2%, and this is with dividends reinvested, or around 8% or 29% total return with dividends not being reinvested. So for a dividend paying ETF that yields north of 15%, pretty consistently, a 10% average annual total return is not bad whatsoever. Not the best, not the worst, but for those investors that are seeking to get more income a little bit faster, SVOL's definitely one to look into. And speaking of shorting the volatility index, this is another ETF that does that, very similar to that of SVOL, only this one does it a little bit more aggressively. This one does it with a full percentage, not 0.2 to 0.3. So ZIVB is the ETF I'm talking about. This has also landed in my portfolio as of recently. I really like the idea of shorting the volatility index because, of course, most of the time at least, it seems like the volatility index trades sideways, if not down, as long as things are calm in the market. Now, ZIVB strategy says aims to provide daily investment results that correspond to the daily performance of the S&P 500 VIX Midterm Futures Inverse Daily Index. And because of this ETF strategy, at least over the last year or so since this ETF has been trading, we're seeing around 25.52% distribution rate. ZIVB has been paying investors around 48 cents every single month over the past several months. Now, with around a 25% distribution rate, at least so far, a lot of investors, including myself, are probably thinking to themselves, this ETF probably has some massive NAV erosion, because to be real, a distribution rate like this doesn't seem sustainable, at least without NAV erosion attached to it. But as you can see right here, over the last 1.38 years, ZIVB, at least so far, has a total return of 54.8%, or an average annual total return of 37%. And this is with dividends reinvested. With dividends not being reinvested, let's say you want to spend these massive distributions along the way, still 56 and 38%, which is still massive. Another income-focused ETF that yields well north of 15%. Another one that I've been buying a lot of as of recently. I think I have maybe north of 200 shares now. SPYT, the Defiance S&P 500 Income Target ETF, which has a distribution rate of 20.12%, and of course pays a distribution monthly. Now the strategy on this one, listen in, aims to achieve a target annual income of 20% in the S&P 500 using options paid out monthly. The strategy overview: SPYT is an actively managed exchange traded fund dedicated to generating current income. Our strategy revolves around holding holding shares of ETFs that track the S&P 500's performance and engaging in selling of daily credit call spreads on the index. So because of this strategy, this ETF, at least so far, has been able to pay out massive distributions. And to give you an idea, we're talking around 32-33 cents every single month for an ETF that, as of right now at least, as of filming this video, costs around $19 per share. So if this ETF is to continue to be able to pay out this amount throughout the rest of this year, it's going to be on target of around 20%, which is insane. But with that, of course, we still have to keep in mind, is there NAV erosion? Has the share price dropped significantly? Well, the starting price of SPYT around half a year ago was around 20 bucks. As of right now, it's around 19 or so. So over the last year, it has dropped a few cents, but with those massive distributions over the last half year, so we don't have that much time to go off of, with dividends reinvested, we're talking around 6.5%. With dividends not reinvested, we're talking around 6.2, or if we annualize it out, 13 or 12%. Either way, once again, a perfect option, at least so far. Looking at what it's done so far, at least, a perfect option for an investor that wants north of 20% yield. And again, there's not that much data to go off of, but so far, so good. Another one of my favorites that yield north of 15%, this one actually just by a tad, 15.16%. This is the NEOS Nasdaq-100 High Income ETF, or QQQI. This is an ETF that I've been buying for the last maybe 3 or 4 months now. I have a small amount of it. I have much more SPYI, but this one's awesome also. This says right here, the strategy is the fund seeks to distribute high monthly income generated from investing in the constituents of the Nasdaq-100 index and implementing a data-driven call option strategy. Now, also important, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities, in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower tax rates. Also, this ETF may buy and or sell options. This also means that if there's upside potential as far as NDX goes, QQQI might also see upside on top of that. Now, why is this important? I'm sure you guys know this. We've went over this before, but of course, cover call style ETFs are sort of capped on the upside normally because the cover call overlay allows them to generate premium, but also does not allow them to generate massive upside. But because of this ETF strategy, it sort of can do both, which is why I'm such a big fan of these NEOS ETFs. So a 15% yield more or less, but also looking at the performance so far, a total return which is to be proud of, 7.8% with dividends reinvested, 7.7% with them not, or around 12 or 13% on average annualized gain, which is not bad whatsoever. Another one that I'm a huge fan of. Now, lastly, a 15% yielding plus ETF that I'm a huge fan of. This has also been in my portfolio for a while. FETP, the Fang Innovation Equity Premium Income ETF. Now, this ETF's objective is pretty simple. I'm sure you guys know this by now, but it basically owns big tech, some of the best names across the entire market. And then you guessed it, writes cover calls. Very simple, yet very effective. Now, because of this ETF offers a 25% distribution rate. And as long as the names within this ETF's basket of holdings, around 60 different stocks as of right now, trade sideways and or up a little bit over time, we're going to see massive distributions and or massive gains on top of that. Now, this is an ETF that I haven't really gone too large on as of recently as far as buying, but it's definitely on my buy list, and I should be grabbing some more FETP if of course it drops anytime soon. But because total return is a very important metric over the last 0.9 years, with dividends reinvested, we're talking 15% total or 17% annualized, with dividends not reinvested, more or less the same. So FETP, just like the rest of these ETFs, yield north of 15%, but also very importantly, offer a positive total return, at least as of filming this video. So there's 5 different ETFs that yield well north of 15%, again, some more than others, but also offer a positive total return, at least historically. But lastly, I want to hear from you guys down below. Out of all 5 of the ETFs that we went over in this video specifically, which is your number 1 favorite of all? My personal favorite, the one that I'm most interested in as of right now, is ticker symbol ZIVB, but comment yours in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.